Trump this morning just announced a 50% tariff on the European Union, but the market this time might be calling his bluff. I'm Gannon. I've been following financial markets for over a decade, here to teach you everything you need to know, so follow along. This morning, stocks opened deep in the red after Trump announced a 50% tariff on the European Union that he said would start on June 1st. He also announced that he would slap major tariffs on Apple over where they make their iPhones, but that's a video for another time. As we all know, markets have panicked whenever Trump announces any tariffs, but this time things are different. Markets have actually rebounded just a couple hours after this announcement over the EU. It's starting to look like Trump's tariff threats have become like the boy who cried wolf. There's nothing more that markets hate than uncertainty, but markets and investors are starting to learn that Trump's tariff talks rarely becomes reality. Go back to April when he announced global tariffs and the market took an absolute tanking for over a week. However, there is one threat that is still very real, and that is the bond market. On Wednesday, the 30-year Treasury yield hit 5.1%, which is the highest since 2023. And according to famous hedge fund manager Ray Dalio, the bond market never lies. As I've talked about in prior videos, when the bond yield rises, it becomes more expensive for businesses and consumers to borrow, which in turn raises interest rates, which makes it more expensive for mortgages, car loans, and credit cards. The TLDR is this can have a massive negative effect on most tech stocks, especially high growth ones. For now, with my positions, I'm personally staying a little cautious. I still have a significant amount of my portfolio in cash ready to buy the dips in my favorite long-term stocks, because even though most of my positions are still close to their all-time highs, pigs always get slaughtered. Follow for more tips on investing, entrepreneurship, and startups.